and we are essentially at the very, very beginning. So I see a lot of growth, top line and bottom line going forward.
Bill, and I see you agreeing with Jenny's and Daniel's comments. No? Do you see the impact in the medium term, like it has been suggested in other panels, etc., or short term and immediate?
Past, present, short-term, medium, and long-term. I think all of the above. I do agree with Daniel and Jenny on everything that they said. I think including the fact that we were engaging in AI before we called it AI. We called it data analytics, and we used it for fraud protection and transaction monitoring and name screening and the sorts of things that large language models were very useful for. But I think, like a lot of us in the corporate world, we got excited about the technology, and you go back 2-3 years, we looked around the bank and we had thousands of data scientists and literally hundreds of AI use cases. And we then took a pause and said that's probably hundreds too many, given our ability to focus on a few things that really matter. So the approach that we took at Standard Chartered was to say, at our core, we're a bank that focuses just on two things. We're actually quite simple. We focus on the cross-border needs of our multinational clients, whether those are financial institutions or corporations or governments. And we serve the affluent populations in the markets in which we operate, which are mostly Asia, Middle East, and Africa. And my challenge to the team was, how many of those 400 use cases are existential for those two sets of activities? If it's existential, we better develop it ourselves and be very good at it. If it's not, we can get it from somebody else, or we can wait a little bit and develop that ourselves. So it's been hard to train people in on 7 to 10 top priorities for us rather than 400. And I can tell you the 400 would have gone to 800 within a year had we not channeled a bit. Now, we'll get to the 800. Many of those you can get off the shelf eventually. It might not be absolutely best in class, but it doesn't matter if it's not existential for us. If it's existential, like my nightmare, and I find our head of retail is sitting in the room right now, the nightmare for me is to wake up one day and find some really zippy fintech who's built a much better robo-advisor that can displace our RMs in an RM-led wealth management distribution model, which is highly successful for us. So if that's your nightmare, then you better have something that is keeping pace with the nightmare. That's what we've done. That's what we're doing. So we've got an excellent, I call it AI augmentation tool for our relationship managers to make them, position them as best in class. And at some point, as appropriate, we'll expose our clients to those tools, but only when they're ready for it and when we're ready for it, which is not today. That's the medium and the long term.
Very good. Thank you, Bill. Now let's move on to the other big trend, stablecoins and digital assets. Jenny, you've spoken quite a bit, and clearly about the potential for tokenization and blockchain technology to transform financial services and your industry in particular. What operational challenges need to be addressed to truly unlock its potential?
What operational challenges? Well, so number one is that you have a bunch of different blockchains out there that aren't all integrated, so integration's one. Number two, so we rolled out a natively on-chain tokenized money market fund in 2021. We were fortunate in that we picked a chain, Stellar, that optimized what we were trying to do. If we had picked other chains, it would have been much more expensive, potentially more expensive than our existing money market funds. So you got to pick the right chain. There's some people that are concerned about the number of transactions per second, but actually there's certain chains that are optimized for that have that are faster than even Visa and MasterCard process. So you're working through a lot of these, but the biggest issue is probably most people don't have a wallet. You can't really hold a token if you don't have a wallet. I'm always hearing about alts managers say, can't wait till blockchain can democratize alternatives. The reality is that technology exists today. You don't have market makers. You don't have the infrastructure around it. And honestly, today, there's almost two worlds. There's the TradFi, the traditional finance world, and the digital asset world, and they're only now beginning to kind of come together. And as that happens, a lot of the traditional learnings that have happened will be brought over and much more professionalize, I think, what's existing in the digital assets. But there is no question, I fundamentally believe infrastructure and plumbing of financial services will be replaced by blockchain.
Quite a statement. Daniel, your firm's perspective on digital assets has evolved significantly in the last years. What prompted that shift or change?
The reality that it hasn't. So obviously, you know Jamie's views on Bitcoin. That is, and he was very clear. These are personal views. For me, Bitcoin is transforming into an asset class. The reality, a lot of keys were lost and stolen, and here we are. So it just became an asset class that is never been is a place to store value if you believe that you will sell it at a higher price than it was. It's not a method of payment because it's slow and expensive. So it is what it is. And I think that in the big scheme of things, Bitcoin is very relevant. But the technology I've been working for many, many years. We launched the JP Morgan coin in 2019. But everything that the industry have done is even private networks, like the JP Morgan coin, that is a very, very effective tools for clients to optimize the flows of funding, program payments, and do instant effects. And many clients are using it, working very well. We have done with Bill and other banks the Patriot program that is a 24/7 network of transferring payments among banks, led in Singapore. So we have done quite a lot. And right now we are at the point where we start experimenting with tokenized deposits, start experimenting into the public chain space that Jenny has mentioned with essentially white label clients. You are approved your part. It's not that you put your coin there, your token there, and see how it goes. I think that is the next layer. I think that tokenized deposits is an effective way to make a bit more interoperable the banking sector with the crypto space. The digitalization of assets is going to start growing. The issue in the banking sector is regulation is a big challenge. When you look at the Basel regulation and their interpretation, essentially prohibit banks to be in a public chain, because the capital intensity is so huge that it makes essentially not possible to do that. So the Genius Act in the US for stable coins of certain characteristics is not going to follow, apparently, the Basel. So in which case it's possible, and I think that there are a bunch of use cases of stable coins that are obvious, like cross-border, small value, cross-border payments. It may be a challenge for some of the existing payment systems that exist today, like credit cards or debit cards. So I think that this is, and the technology is evolving. As Jenny said, Bitcoin is super slow. Ethereum is a bit faster but relatively expensive for low-value payments. Then there are other networks that they are evolving that they are very, very fast, but they have other challenges.